Bitcoin just hit $100,000, Ethereum is back in the spotlight, and governments around the world are finally taking crypto seriously. But here's the big question: is cryptocurrency now a legitimate investment or just a high-stakes gamble in disguise? Whether you're a seasoned investor or just crypto curious, the landscape has shifted dramatically. Major institutions are buying in, new regulations are on the horizon, and digital assets are making their way into mainstream finance. In this video, we're breaking down the current state of crypto, why it's booming again, the risks you need to know about, and whether it's finally time to treat it as a serious investment. Oh, and stick around! I'll also share some tips on how to approach crypto responsibly if you're thinking of diving in. Let's unravel the mystery of crypto and figure out if it's the right move for your portfolio. Ready? Let's dive in. To understand why cryptocurrency is making headlines again, we need to rewind the clock a bit to 2008 when an anonymous figure named Satoshi Nakamoto published a revolutionary idea: Bitcoin, a decentralized digital currency. At first, Bitcoin was a niche experiment, embraced mostly by tech enthusiasts and a few forward-thinking libertarians. But as its value grew, so did its reach. In 2010, Bitcoin made history with the first real-world transaction: 2 pizzas purchased for 10,000 Bitcoin. Well, those pizzas would be worth over $1 billion today. Over the years, Bitcoin's rise paved the way for thousands of other cryptocurrencies. Ethereum introduced smart contracts, allowing for decentralized applications. Dogecoin? Well, that brought a little humor to the mix, and stablecoins like USDC promised less volatility for everyday use. What started as an experimental technology is now a $1 trillion market. Governments, banks, and major corporations have all taken notice. Today, cryptocurrencies are no longer just a fringe idea. They're disrupting industries, reshaping financial systems, and creating entirely new markets like DeFi and NFTs. So why are we even talking about crypto as a serious investment now? Well, let's break it down. The first, and probably the biggest reason: institutional adoption. When companies like MicroStrategy, Tesla, and even governments start holding Bitcoin, it signals a massive shift. MicroStrategy alone now owns over 40 billion worth of Bitcoin. And it's not just companies. Bitcoin-backed ETFs are now a thing, giving everyday investors a simpler way to invest in crypto through traditional brokerage accounts. These products legitimize crypto for a whole new audience. Then there's regulation. For years, crypto was like the Wild West, exciting but unregulated. Now, we're seeing governments step in, not to shut it down, but to integrate it into the financial system. Take the recent approval of crypto-friendly policies in the US, or the establishment of crypto hubs in places like Singapore and Dubai. These moves make it easier and safer for institutions to get involved. Crypto has grown up. The market now includes robust exchanges, custodial services for institutional investors, and even insurance against theft. This isn't the same chaotic market from 2017. We're also seeing liquidity improve, making it easier to buy, sell, and trade assets quickly. These factors make the market more appealing to big money players. Finally, there's diversification. Crypto doesn't always move in sync with traditional markets, making a potentially valuable addition to your portfolio. Think of it as the digital gold of the 21st century. Like gold, Bitcoin is seen as a hedge against inflation. But unlike gold, crypto also offers innovation and has high potential for returns. So, with institutions buying in, governments warming up, and markets maturing, the case for crypto as a serious investment is stronger than ever. But before you dive in, there's another side to the story. Alright, we've talked about why crypto might be a serious investment, but here's the flip side: the risks and challenges that could make or break your decision to invest. Let's start with the obvious: volatility. Crypto prices can skyrocket one day and plummet the next. Take Bitcoin for example. It's climbed over $100,000 this year, but has also lost more than 50% of its value in previous crashes. Imagine waking up to find your portfolio has halved overnight. That's the reality of this market, and it's not for the faint of heart. Next, let's talk about regulation. While some governments are embracing crypto, others aren't so friendly. China, for instance, has repeatedly cracked down on crypto mining and trading. Even in crypto-friendly regions, new rules could disrupt the market. Taxes, trading restrictions, or bans on certain coins could quickly change the game. Crypto may be digital, but it's not immune to old-fashioned scams and theft. For phishing attacks to rug pulls, bad actors are everywhere in this space, And then there's the issue of losing access. If you forgot the password to your digital wallet, your funds could be gone forever. There's no forgot password button in crypto. Despite the hype, much of the crypto market is still driven by speculation. Meme coins like Dogecoin and Shiba Inu can gain billions in value without any fundamental utility. If you're investing in a project without understanding its use case or technology, you're not investing, you're gambling. Finally, let's address the environmental impact. Bitcoin mining, for example, consumes as much energy as some small countries. This has led to criticism and even bans in certain regions. However, newer cryptocurrencies like Ethereum have shifted to more eco-friendly systems like proof of stake. So while it's a valid concern, solutions are emerging. So yes, crypto offers incredible opportunities, but the risks are just as real. It's not a get-rich-quick scheme, and it's definitely not a sure thing. Now let's dive into what the experts and the numbers are saying about cryptocurrency as an investment. Spoiler alert, opinions are divided, but the data reveals some fascinating trends.
I'm going to be buying Bitcoin at the top forever. I joked with Dave Portnoy today. He said, I missed it at 10,000, I missed it at 20,000, I missed it at 100,000. I said, Dave, it's still less than $1 million a coin. You're getting a 90% discount from $1 million a coin. I'm sure that I will be buying Bitcoin at $1 million a coin, probably $1 billion a day of Bitcoin at $1 million a coin. And so I think it's a very simple idea. Just keep buying Bitcoin with your spare capital. It's going to appreciate against the dollar forever.
Saylor is one of many institutional leaders who believe Bitcoin is the ultimate hedge against inflation. With companies like Tesla and Square also holding crypto, the sentiment is clear. Institutions are betting big on its long-term potential.
What is it about Bitcoin that gets you guys so fired up?
Well, when you buy a farm, you look at the crop every year and what prices are, and you decide whether it was a satisfactory investment. I mean, you look to the asset itself and what it produces for you. When we buy a business, we look at what the business earns and decide how we feel about it in terms of what we paid. But we are buying something that at the end of the period, we not only have what we bought in the first place, but we have something that the asset produced. And when you buy non-productive assets, all you're counting on is whether the next person is going to pay you more because they're even more excited about another next person coming along. But the asset itself is creating nothing.
While some hail crypto as the future, others like Warren Buffett caution that its speculative nature makes it unsuitable for conservative investors. Now let's look at the numbers. Over the last 10 years, Bitcoin has outperformed nearly every traditional asset class with an average annual return of over 200%. However, those returns come with massive volatility. For perspective, Bitcoin's price dropped nearly 80% during the 2018 bear market, but bounced back to all-time highs just a few years later. Adoption is also on the rise. A recent survey found that over 420 million people worldwide own some form of cryptocurrency, with emerging markets like India and Nigeria leading the way. And it's not just individuals. Governments are exploring central bank digital currencies, and businesses like PayPal and Visa are integrating crypto payment options. If Bitcoin maintains its current trajectory and regulatory support continues, we could see it becoming a standard asset class in global portfolios within the next decade. Many analysts predict that the next big wave of growth will come from institutional investors and sovereign wealth funds entering the market. But as always, these are just predictions. Crypto remains unpredictable. So whether you're a crypto enthusiast or skeptic, the experts and the data make one thing clear. Cryptocurrency is impossible to ignore. The question is, how do you approach it responsibly? So you're thinking about investing in crypto? Before you dive in, let's talk strategy. Crypto isn't just about throwing money at the latest hype. It's about making informed, calculated decisions. Here's how to approach it responsibly. First, do your homework. Cryptocurrencies aren't one size fits all. Bitcoin is often called digital gold, while Ethereum powers decentralized applications. Then there are thousands of altcoins with varying degrees of risk and utility. Ask yourself, what problem does this cryptocurrency solve? Who's behind it? And is there a real use cause, or is it just hype? Crypto is volatile. Prices can swing wildly in a single day. That's why the golden rule is to only invest money you're willing to lose. Think of crypto as a high-risk, high-reward part of your portfolio, not your retirement fund. Diversification is your best friend. Instead of going all in on one coin, spread your investments across several assets. This reduces your risk if one project fails. For example, you could allocate 60% to established assets like Bitcoin and Ethereum and 40% to smaller high-potential altcoins. That way, you're balancing stability and growth. Timing the market is tough, even for the pros. Instead of trying to buy the dips, consider dollar cost averaging. This strategy involves investing a fixed amount at regular intervals, reducing the impact of market volatility. For example, you could invest $100 every month, regardless of the market's ups and downs. Over time, this approach can smooth out the highs and lows. Next, security is crucial. Store your crypto in a secure wallet, preferably a hardware wallet, to protect it from hacks and scams. And don't forget to enable two-factor authentication on all your accounts. In crypto, you're your own bank, so act like it. Crypto evolves fast. What's true today might not be true tomorrow. Stay informed by following trusted news sources and communities. And don't fall for FOMO. Fear of missing out can lead to bad decisions. Take your time and only act when you fully understand the risks. Finally, plan your exit. Decide in advance when you'll take profits or cut losses. Whether it's reaching a certain price target or reallocating funds, having a plan will keep emotions in check. Remember, no one ever went broke taking profits. So there you have it, a roadmap to approach crypto investing wisely. It's a thrilling market, but it's not for everyone. If you do decide to invest, make sure you're prepared, stay informed, and always protect your assets. Alright, we've covered a lot today. From the evolution of cryptocurrency to the case for investing, the risks, and how to navigate this unpredictable market. So is crypto worth it? Well, let's break it down. On the one hand, crypto has come a long way. Institutional adoption, regulatory progress, and maturing markets have brought legitimacy to what was once seen as a fringe experiment. But on the other hand, it's still a highly volatile speculative asset with high risks that can't be ignored, whether it's market crashes, security concerns, or regulatory uncertainty. Here's the bottom line. Cryptocurrency isn't a guaranteed win, but it's also no longer just a gamble. It's a high-risk, high-reward asset that could have a place in your portfolio if and only if it aligns with your financial goals and risk tolerance. Whether crypto is opportunity or speculation, you decide. If you're excited by the potential but wary of the risks, start small, invest responsibly, and never stop learning. Remember, the best investment you can make is in your own education. Now I want to hear from you. What do you think? Is crypto the future of finance or just another bubble waiting to pop? Drop your thoughts in the comments and join the conversation. Crypto is evolving fast, and while the risks are high, so are the possibilities. The question isn't just whether crypto is worth it, it's whether you're ready to embrace the challenge and the opportunity. Thank you for watching. Please like and subscribe, and see you in the next video.